Sugar daddy and investment life bring you freedom of financial.
Hello everyone. Today, the stock market rebounded thanks to easing China-US trade tensions. Overall, though the trade conflict between China and the US has worsened, Trump is concerned about the upcoming midterm election. He can't further intensify disagreements with China to avoid breaking the supply chain and worsening the economy. So, strategies of both sides are more about dragging things out and seeking solutions. On one hand, the US seeks foreign sources of key resources like rare earths to reduce dependence on China. On the other, it pushes China to increase imports of agricultural products like soybeans. This eases pressure on the US agricultural sector. Trump's softer stance on trade with China and the prediction of reaching a fantastic agreement have boosted tech stocks, with the Nasdaq index rising by more than 1% today. On the Chinese side, they responded by promising to increase purchases of US agricultural products. This is expected to stabilize soybean prices in the short term and prevent further tariff escalation. Mutual concession between both sides is unlikely to escalate into full confrontation short term. China won't take an overly tough stance. The US still has leverage like financial sanctions and its allies. Concurrently, China focuses on internal economic stability and AI industry development, increasing support for Huawei and Baidu. Investments in local AI companies ensure supply chain independence. Just like I mentioned yesterday, this situation might develop into a third possibility, which is to keep dragging things out without any real breakthrough, until it just fizzles out. In this situation, it's expected that the stock market will fluctuate at high levels, without any significant surge. The market's focus will shift to corporate earnings performance, especially the quarterly reports of major tech and internet companies. If these giants see a decline in profits, like Google's app and ad revenue, or Apple's iPhone sales, then the market will quickly start pricing in a recession, right? Which would trigger a correction. On the other hand, if their earnings beat expectations, like if Amazon's cloud services grow by more than 20%, then that could support the current stock prices. For now, looking at the stock market, it doesn't seem like it's going to go much higher either. It's also unlikely that there will be a big drop of more than 10%. It's expected that the market will find a balance amid the volatility. Alright, so today what I want to talk about is which stocks can be seized, and in the future, which stocks will have that unbeatable technological moat? Which ones can really stand in an invincible position? My answer is Tesla. Tesla's stock price over the past year has generally fluctuated between 300 and 500. The lowest point was actually this year. The recent lowest was around $380. In September and early October, it gradually held steady at the $400 mark. Up until today, Tesla's stock price. It closed at $440, with a market value of about 1.4 trillion US dollars. I expect that in the short term, the stock price has a chance to stay steady around $440. If the earnings are impressive, it might even surge up to $600. Why am I so optimistic about Tesla? The key is that it has this powerful technological moat. Right now, it's number one. It's the only company that can fully develop autonomous driving. As for Tesla's market value, most of it is already based on expectations for autonomous driving. If you only count the value from selling electric cars, its current valuation is definitely expensive. Now, what really supports its 1.4 trillion US dollar valuation is the future pricing of autonomous driving. According to market research, the US autonomous driving market will already reach $2.5 billion by 2025, and with a compound annual growth rate of 27.5%, it will expand to 5.6 billion by 2030. So if you take the global market into account, it's expected to reach 12.2 billion US dollars by 2030. Among these, the taxi market is growing the fastest. It can grow at 40% per year, thanks to advancements in AI and the relaxation of regulation. If Tesla can capture 80% of the US market, that would bring in over 4.5 billion US dollars in potential value. And if they can expand globally, it could be even more. The revenue contribution from this business could reach over $1 trillion in long-term income. If you take ride-sharing into account, the revenue per mile can be over $1 US. So what is it that makes Tesla stand out? The biggest impact comes from its autonomous driving technology. Autonomous driving technology has already become the core driver of Tesla's stock price, just like taxis. Analysts estimate that it now contributes to over 90% of Tesla's market value. As for traditional ones, EVs are no longer the main thing anymore. Including revenue and calculations, for example, right now. Rappers analysts then predict that if Tesla successfully rolls out its autonomous driving and robotics strategies, its market value could easily reach $3 trillion US. That would make its stock price double, because the taxi business is expected to. In 2025, it will start, that is, by the end of this year, they'll begin launching paid services. Independently contribute to its gross profit and revenue. For this, the revenue from EVs could increase by 5 to 10 times, right? Famous investor Cathie is the most optimistic. She believes that the Robotaxi business alone could boost Tesla's market cap up to $6 trillion US, because she says it's based on the explosive growth of the global ride-sharing market. The recent FSD 14 update pushed the stock price up by 3%, lifting the overall market sentiment. If, say, in the third quarter financial report announced on October 22nd, everyone will focus on Robotaxi's progress. If it exceeds expectations, the stock price could rise 5 to 10% in the short term. Overall, autonomous driving is Tesla's growth engine. It's transforming from an EV company into an AI giant, reshaping its valuation and achieving long-term explosive growth. Autonomous driving technology is seen as the key catalyst for Tesla's market value turnaround, according to market analysts and institutions. This isn't due to its technological lead, but its high-margin revenue model and its global market expansion. Yeah, that's right. Talking about how valuable it is one thing, but how do we actually crunch the numbers? Let me break it down for everyone, step by step. So, what's the projected size of the global robotaxi market by 2030? It's expected to reach 10 trillion US dollars, and among that, the US market. It accounts for about 3 to 4 trillion. If Tesla leverages the flywheel effect of its FSD data, it's expected to capture around 20 to 50% of the market share, contributing a long-term value of 1 to 5 trillion on its own. If Robotaxi can be deployed at scale by 2026, then it's estimated that annual revenue could increase by 50 to 100 billion US dollars, with a gross margin of over 70%. In this way, they could really succeed. And that's how they could successfully transform from an EV company into an AI platform. All these figures show that autonomous driving is not Just Tesla's protective moat alone is already a killer move for this group. So how can we be sure that Tesla will definitely succeed in the field of autonomous driving? I think there are three main factors. First, Tesla's full self-driving system relies entirely on visual neural networks. Instead of traditional radar or LiDAR, many mistakenly think Tesla abandoned LiDAR just to save money, but that's not the case. LiDAR and vision systems actually conflict. LiDAR relies on laser-based object detection, easily affected by reflections and interference. For example, rain, fog, and metal surfaces can distort microwave signals, leading to data loss. If you use LiDAR in heavy rain, it's even more likely to mistake raindrops for obstacles, triggering unnecessary braking. And now, in cities with lots of tall buildings, reflected signals can cause ghosting interference. Human drivers mainly rely on their eyes, so what about Tesla's 8 high-resolution cameras? They're able to recognize road conditions in real-world environments. So why can't other companies develop a visual neural system? Well, it's because when training the neural system, you need massive amounts of data. There are over 5 million vehicles equipped with FSD, and the taxi fleet alone accumulates more than 5 billion miles of driving data every year. This is more than 10 times what competitors have. Take Waymo for example, even though they have advanced technology, their data mainly comes from a limited test fleet of about 2,000 vehicles. This leads to weaker model generalization, so they can only operate in specific cities. For instance, running Tesla's FSD in Phoenix. It can be used nationwide, and even navigate right to a private garage, without being limited to highways. This kind of data flywheel effect really means the more cars there are, the stronger it gets. That's what allows Tesla to iterate its AI models rapidly, with weekly software updates that can optimize based on user feedback. Edge cases. Pedestrian detection night accuracy increased 55%. What's the second reason? If you want to run a driverless taxi service, you need a massive fleet. As the world's largest electric vehicle manufacturer, Tesla produced over 447,000 cars in the third quarter of 2025 alone, with an annual output exceeding 1.8 million vehicles. The foundation is already there. All that's needed is, with just a software upgrade, the current cars can be turned into Uber test vehicles. But even though Tesla has an idea, which is to make a cyber, but looking at the current situation, maybe that's not necessary. Using the Model Y directly would work. Waymo's vehicles need customization, costs higher weight, and it costs around $150,000. Production volume is a few thousand units, hard to scale nationwide. China's Robotaxi is more so. They keep changing things over and over. Originally, they were using LiDAR, but now they want to follow Tesla and switch to vision-based system. And as for neural networks, the time they need might still be quite a while, because after all, they're still lagging behind. The third reason that makes me think Tesla is unbeatable is because it has political backing. Political partners, and also political protection. His political partner is, well, the Republican Party. Even though Elon Musk and Donald Trump have had some friction, their relationship is already tied together. He has donated hundreds of millions of US dollars to the Republican Party several times. Also, he once said he would support Vice President Pence in running for the next election. It's expected that after 2025, with the Republican Party leading, federal policies will relax regulations on autonomous driving. For example, Expanding the exemption testing scope for FSD. Elon Musk is actually one of the biggest donors to the Republican Party, so will his contributions pay off? In other words, the realization of these interests is really just a matter of time. So, putting these 3 points together, I think Tesla is able to take control of the future of autonomous driving because it has the technological, manufacturing, and policy advantages to secure an unbeatable position. Short-term volatility is a buying opportunity, and in the long run, it will keep growing. The short-term target is $600, and if autonomous driving continues to perform well, the mid-term target is $880.
Please subscribe and follow New York Daddy Investment.